Okay, let's unpack this. You're driving, you're doing everything right, and then crunch. Someone else blows a stop sign, hits your car, and suddenly you're thrown into this whole confusing world of accident claims.
That feeling is just the worst. It's that initial powerlessness, especially when the police report is crystal clear. You are 100% not at fault.
Right. You assume it's simple. They pay, you fix the car.
But then you start dealing with the other driver's insurance, maybe a big company like Farmers, and it suddenly feels like a full-time job you never asked for.
We saw this play out perfectly with a listener. We'll call him Mark. His SUV got pretty significant but repairable damage after another driver just flew through a red light.
A textbook case. No question about who's liable.
Exactly. So Mark calls his family's auto body shop, a place he trusts, and that is where the confusion really kicked in.
Mark thought, the insurer would just send him a check based on their estimate and he'd take that to his shop. Simple.
But the adjuster on the phone immediately starts talking about digital photo estimates and direct repair programs and paying the shop directly.
And Mark felt his control just slipping away, even though he was the victim here.
And his big question, which is really the mission for this deep dive, was twofold. First, don't I have the right to pick my own shop?
And second, why can't they just give me the cash and let me handle it?
So today, we're going to give you a clear, actionable guide on how to assert your rights and, avoid those common mistakes that can cost you time and money.
Well, the short answer to choosing your own shop is a resounding yes, absolutely. That right is protected, and it's probably the most powerful tool you have in this whole process.
Okay, so that's the big takeaway right up front.
It is. The complexity, though, isn't in the choice. It's in how the payment system works now. The workflow for estimates and payments has changed a lot, and understanding that is what saves you the headache.
So let's start right there. The right to choose. It's crucial. You get to steer the ship. Mark wanted his family's trusted shop, not some random place the insurer picked from a list.
Of course.
But if you have that right, why do insurance companies push so hard for their own shops, for these preliminary estimates and direct payments? What changed from the old way of just, mailing out a check?
The main reason is something called the supplemental claim. It was a nightmare, honestly, for everybody involved.
A supplement, so like an additional cost.
Exactly. In the old days, an adjuster would look at the car, write a check for, say, $3,000 and mail it to you.
And you'd think you're all set.
You would. But then you take it to the shop, they pull off the bumper, and they find another $4,000 of hidden damage. A bent frame, cracked components you couldn't see.
Oh, so the car owner, Mark, in this case, he's stuck. The shop needs twice the money, but he's only got the first check.
He's caught right in the middle, constantly calling the adjuster, fighting for more money, sometimes having to pay the difference himself just to get his car back.
What a mess.
It was. So the modern workflow, it tries to get you, the car owner, completely out of that payment equation.
That actually makes sense as a way to protect you, even if it feels a little controlling at first.
It does.
So let's talk about the process Mark should expect now. It starts with that quick digital photo-based estimate, right? That's just for efficiency.
Yeah, the standard operating procedure, it just gets a baseline of the visible damage.
Yeah.
But here is the critical pivot point. The insurer prefers to pay your repair shop directly.
Not the car owner.
Not you. And once Mark takes his car to his chosen shop, the one he trusts, that shop becomes his advocate.
And this is where a good shop really earns its money. What happens when they do take the bumper off and find that hidden damage?
They handle it. All of it. The shop contacts the adjuster directly, they send detailed photos, documentation of the new damage, and they submit the supplement, that additional bill for approval.
So the shop and the insurer negotiate the final price.
Yes. Mark only has to deal with dropping the car off and picking it up. He never has to worry about the cost going up after the work starts.
Okay, but here's where it gets really interesting. Insurance companies will often push you towards their pre-approved network of shops, their DRP or direct repair program.
They will.
What if the farmer's adjuster tells Mark, we can only guarantee the work if you use our shop, or we can't process supplements quickly with your guy?
That is a classic tactic. You have to recognize that as steering, and Mark has the right to just say no. They might imply delays or bad quality, but that's not really true.
So what does he say?
He just calmly says, I understand your recommendation, but I have selected name of chosen shop. You're responsible for the repair, and I expect you to honor the estimate and supplement process with my chosen shop.
That's a powerful script to have in your back pocket. Okay, now that we get the supplement process, let's detail the two paths Mark can take for payment. Let's start with path A. the direct approach?
Path A is usually the ideal one. It focuses entirely on making the at-fault driver's insurance, the third party, responsible for everything.
So you're only using their liability coverage.
Exactly. It's usually the most straightforward and least costly path for you.
So, actionable steps. Mark has the police report. Liability is clear. How does he kick off Path A?
First, he files what's called a third-party claim with the at-fault driver's insurer. Just means you're not their customer, but you're making a claim against their policy.
And you need their policy number for that.
You do. And second, and this is crucial, Mark has to assert his choice and set the expectation right away.
Give us the full version of what he should say.
Something like, I am pursuing this as a third-party liability claim. I've chosen my repair shop, name of shop. I expect your adjuster to coordinate the full repair, including all supplements, directly with them. I will not be involving my own insurance.
Wow, that just immediately establishes control. It prevents them from trying to push you around.
It does. And the advantages of sticking with Path A are huge.
What are the big ones?
1, it keeps your own claims history completely clean. Your insurer never even logs a claim. 2, you never pay a deductible. Not a single dollar.
Because you're using the other driver's policy.
Right. And their liability coverage has no deductible for the victim. And 3, all the administrative work, all the arguments over supplements, that's all on them. They deal with the headache, not you.
That sounds fantastic, but, we all know insurance companies don't always cooperate.
That's true.
What if the adjuster drags their feet for weeks, or maybe the other driver suddenly tries to dispute it, even with a police report? Mark needs his car back.
And that brings us to Path B, using your own insurance as the backup plan.
The contingency. So this is when you use your own first-party collision coverage.
Use it when speed is what matters most, or if the other insurer is just being uncooperative. With your own policy, you can get the repairs started tomorrow.
So Mark files a first-party claim with his own company. What's the major catch he needs to be ready for?
The main downside, mechanically, is that you have to pay your deductible up front to your shop. It's just part of your contract.
So you get speed, but you're out of pocket, at least for a while.
You're temporarily fronting the cash, yes.
But that money isn't just gone forever. This is where we need to talk about that term. Subrogation.
Subrogation. It's the engine that makes Path B work.
Explain how it works, and what's a realistic timeline for Mark to get his money back.
Well, subrogation is basically your insurance company stepping into your shoes, legally. Your insurer pays the full repair bill minus the deductible Mark paid.
Okay.
Then, your insurer goes after the at-fault driver's company for full reimbursement of everything they spent, plus Mark's deductible.
So it's a big company-to-company fight that Mark gets to just watch from the sidelines.
Precisely. The timeline is the key thing, though. If liability is crystal clear, subrogation might take, 30 to 60 days. But if there's any dispute, it can drag on for 6 months, maybe even a year.
That's a huge difference. So Path B gets the car fixed fast, but Mark is out that, say, $500 or $1,000 for an unknown amount of time. It's a trade-off.
It's a trade-off between speed and avoiding that immediate cost. If Mark can live without the car for a couple of weeks, Path A is always better financially. If he needs it tomorrow, Path B is the way to go.
Let's circle back to Mark's other big question. Why can't I just get the cash? We've established that the system prefers paying the shop to handle those supplements. But what if Mark decides he doesn't even want to repair the car?
A direct cash payout is available in 2 very specific situations.
Okay.
First, if Mark decides he wants to take the money and just not fix the car, the insurer will pay him the estimated repair cost minus a deductible if he went with Path B.
And what's the second scenario?
The second is if the car is declared a total loss, meaning the cost to repair it is more than the car is worth, usually over about 75 or 80% of its value.
And in that case, they pay out the actual cash value, the ACV, of the car.
Right, and we should be clear about what ACV means.
Yeah, that term gets thrown around a lot. It's not what it costs to buy a new car, is it?
No. Actual cash value is the market value of your vehicle the second before the accident. It factors in depreciation, mileage, condition. It's what a similar used car would sell for today.
So let's go back to that first scenario. Mark takes the cash, decides not to fix his damaged SUV. It sounds tempting, right? Maybe he can fix it cheaper himself or just sell it as is. But you mentioned a serious warning about the car's title.
This is a major warning. If Mark accepts that full payout but doesn't repair the vehicle, he could trigger what's called a branded title.
A branded title?
Yeah, specifically a salvage title, or even irreparable, depending on the state and how bad the damage was.
And what does that mean for Mark down the line if he tries to sell it or insure it?
It absolutely tanks the resale value, and it can make it very, very difficult, sometimes impossible, to get full insurance coverage on that car ever again.
So he might think he's pocketing a few $1,000s now.
But he's just severely damaged the long-term value of his own property. That cash payout really only makes sense if you're planning to repair it properly or just get rid of the car entirely.
That adds such crucial context. So to wrap this up for Mark and everyone listening, what is the single most empowering action you can take to gain control of this process?
You have to reiterate that central demand for Path A. You control the shop choice, and the at-fault insurer has to coordinate and pay that shop directly for everything, the initial estimate and all the supplements.
And by stating that firmly, you shift the burden back where it belongs.
Exactly. It stops being your financial problem and becomes a required business transaction between your shop and their insurance company.
Which lets you focus on the quality of the work, not on chasing down payments.
Precisely. And since choosing that shop is your most powerful right, this brings up a final thought for you to mull over. Beyond just family trust, what should you really look for in a repair shop?
To make sure they can actually handle this complicated process with the other insurer.
Right. What questions should you ask to be sure they're not just good technicians, but also good advocates?
You need a shop that has a track record of fighting for original equipment manufacturer parts, OEM parts, and one that has the office staff to deal professionally with adjusters who might try to nickel and dime the supplements.
Think about that. The quality of your repair isn't just about the person with the tools, it's about the shop's administrative strength to make sure they get paid fairly to restore your car the right way. That due diligence is your final layer of protection.
Thanks for tuning in to today's episode of the Blue Rock Insurance Podcast. If you're looking for clarity, confidence, and the right protection for your home, business, or car, we're here to help. Reach out to Blue Rock Insurance Services today and let our experts guide you toward the coverage that truly fits your life. Visit us online or give us a call. Your peace of mind starts with the right conversation. Until next time, stay protected and stay empowered.